All right, so can everybody see my screen and hear my voice? Perfect, man. All right, thank you. Appreciate it, Sean. All right, welcome to the DMR. It is Wednesday, the last Wednesday of January. And just like that, we're moving along, man. Okay, a lot of good stuff to cover tonight. Always have too many slides and not enough time. I'm trying not to go over, but it just seems to be happening. I don't know if I got too much to say this year. Excited. All right, welcome all you new guys. Happy to have you. Happy 2022. It's officially the last day of this slide. I'll dump it because now we're into the year and it's not Happy New Year anymore. Now it's just let's get to work. All right. Motivation, my favorite guy, Jim Rohn, one of my favorite guys. Listen, everyone's excited. I showed you the curve first webinar of the year. Everyone's excited. First of the year, you got big hopes, big aspirations, big goals. Okay, that's what gets you started. Now you got to develop the habits to keep this grinding it out all year. It's just that simple, right? The promises you made to yourself, to whoever on New Year's Eve, that stuff's starting to fade. And you're starting with the, why did I ever say that shit? Maybe I had too much to drink, right? That's not the way it works, man. The way it works is that you turn that motivation into a consistent behavior, becomes a habit. The habit carries you for the next 11 months and you'll reach your goals. The idea is, though, is our 12-week year is to hit some targets on a regular basis, weekly, daily, string that together for 90 days. You got yourself a quarter, and 3 more of those, you got yourself a year. And I know it sounds too simple, but it really is that simple. You know, I check this stuff off, I draw lines through it, and before you know it, we're back in December. I've been doing this for a few years now. Been trading for 22, coming on 23 years, and I've been teaching you guys for almost 11 years, 10, 11 years. And I don't know where the time goes. But you know what? It's SSDD, SSDY, man. And it's the same repetitive cycles, and it's the same mental hangups, blocks, childhood fears, anxieties, adult pressures. It's nothing's changed for the group as a whole. I know we've had a lot of new people come aboard and a lot of people wash out. It's just life. But this is where the rubber meets the road. It's the beginning of the year. You should be at the most excited state that you are. If you're not, you're probably in the wrong business, man. If you're dreading getting in front of this stuff, if you're dreading doing the work, it's probably not for you. And you know what? Let's save ourselves both some aggravation. And if you're not where you need to be, if this is not the right place for you, I completely understand. You got to decide. You're at a decision point. 1 month down in the year, heading into February. It's cold outside. Perfect time to be inside and get to work. All right, so we're reading this book. I've had a lot of good feedback, but I guess it's like a lot of feedback from a handful of people. So I don't know where everybody's at with this thing. I think it's a pretty good book compared to all the other, I don't want to say crap that I've read, but it's pretty good. You know, when I say read, I mean listen to in the gym or whatever, you know, in the car. Audiobook only, man. I don't have that kind of time to sit and literally read a book cover to cover. I wish I did, I just don't. So I want to talk about this, but I don't want to bore half the group or 3/4 of the group that's not doing this. Let me know if you're like into this thing. Some people want to talk about it. I'm getting some, yep, I see you. Okay, so next week. Okay, so let me kick it around because I have to put a presentation together just on this book, and I don't want to lose you guys, man. I don't want it to be like 3 people excited and the rest of you are like, I got to go. This is BS. I'm not into it, right? That's what I'm hoping. The guy has some good insights on stuff. It's a different take. You know, he's different than the other stuff. You know, we had Randy a few years ago, traditional stuff. There's a couple other guys that I like. But it's all, I don't know, man. I don't know if there's just no other angles on this stuff. It's either you do some breathing exercises and you get over your own stuff and you push through it, or maybe this journaling thing. I've never been a fan of this stuff, but people are seeing some success and some turnaround and stuff, that deep-seated stuff from childhood, and that's the whole point. Everybody's got baggage, man. I grew up lower middle class probably, and you know what I'm saying? That stuff gives you a certain set of fears, being less than, not having the right kind of clothes in school. I'll know how old you are if you know what hot boxers are, and I had my share of those, man. And it's a pair of shoes. So that stuff makes you feel less than in life, and it's just part of your self-confidence, your self-esteem. It builds your persona, and that's the kind of stuff you got to push through. And if this trading book helps you do that, right, it starts to get to where you're going through, you're having success, then you start feeling like you don't deserve this stuff. And I worked through all my stuff just like everybody else in the group. So you got to figure out how to numb yourself from that and push through. And that's the hard stuff, man. That's the stuff that nobody talks about. It's different for every single person. And I said this in the live groups in New York a couple times, and not sure if I pointed out here, but if you grew up with parents that got the electric bill cut off, or you had your father was living paycheck to paycheck and you had no food in the house on Wednesday and Thursday, and then Friday all of a sudden, it was feast or famine type situation. These are the things that weigh on you heavy as a child. And these are the things that shape you as an adult. And this is the difference between facing this stuff and becoming successful, or not dealing with it and letting it destroy you internally. You could have great success in the trading business, and your account could be up and you can give it all back because you start feeling these emotions. It's just part of life, man. You got to work through that, and this book might be the catalyst to help you do that. That's all I'm saying. A lot of I listen, you guys know me for a long time, especially my old timers, my original classes. I hate this crap, but there's something to it. I was taught how to, on the fire department, how to ignore what's going on around you and act and focus on the task at hand. There's a car accident, you got people trapped, fire, gas leaking, right? Your job, if you're on medical, your job is to be inside the car taking care of the people, and the guys around you, your team backs you up, and they make sure the fire's out, that you don't burn to death in that car, it doesn't go over the embankment. That's their job, and they're focused on that. Your job as a trader is to focus on getting in and getting out and managing the trade. And if you can black out all this other stuff that you grew up around and that you're dealing with, you're going to move forward in the business. But the minute this stuff creeps back into your life or your mind, you're going to see problems. And maybe this book might be the catalyst to help you get past that. Fear, greed, afraid to be wrong, all those things come into play, man. Can't be wrong. All right, so yeah, I just asked you, we done? Should we go through the book next week, 2 weeks? I want to make the presentation interesting. I don't want it to be one guy's excited and the rest of you like clicking out of here on me. So we'll kick it around. I'll see. Send me some emails this week. Let me know. All right, this is it. Last time we're going to be together in January, just like that. Next time we talk, it'll be February 2nd, heading into Valentine's Day. All right, so boom, over, just like that. Now, where are you at? Okay, use this weekend coming up, Friday, Saturday, Sunday, to see where you are. Analyze what happened. I know we started late, right? Because you got to get out of that holiday mode. Got to get the cobwebs off. Got to get reinvested in what's going on in your life around you. You take off most of December and a couple weeks in January, and it's a nice break, man, but you got to re-engage, and that's the hard part. You got to reform the habits, get the cobwebs off, get re-engaged in the business. All right, so you should be a couple weeks down on your cycle, and you need to take inventory over the weekend to see where you're at, make adjustments going in the first week of February. Okay, adjustments by, I mean, analyze what you've done. If you're doing markups, how many have you done? You done 50, 100, 2? Okay, well, if you've done 2, you ain't getting any shit done so far this year. Just take stock of where you're at. Maybe just walk away on Friday on the 28th and don't do anything for the weekend. Think about it, and then Sunday, Monday night, see where you're at. You know, just go out, maybe take your wife out, go have a couple drinks, hold one glass up for me or pour some out for me, whatever. And then just see where you're at. All right, so we know this, right? It's a multifaceted business. Going through this stuff, we know that chart reading and seeing and identifying patterns for your directional bias is just simply not enough. It's many facets to get a working model, right? Trade execution, setups, high probability places on the chart where trades are about to happen. You got to know how to do that. Then once you put the trade on, you're going to have to manage. You got to deal with your stops, your take profits, not moving too soon, not getting tapped out too early, not getting break evens every time. Understanding the nuances of price, right? If you got a 3R setup and you're holding for 3R and you have a good probability of hitting that, right? High probability places on the chart, then maybe you don't move your stop into the positive space and +1, maybe you move your stop in the negative space. If you're using a 15 pip stop at 2% risk, you move it to 7, now you're at 1% risk. So you took some off without actually taking some off, and you left some room to not get tapped out at +1. But if you're getting tapped out at -7, then you're trailing too tight or you're not making good entries. Right? Trade execution, trade management, dealing with stops, take profit, trails, blah, 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 money management. Okay, then you got to figure out your working capital, your risk, your R values, your scaling style, withdrawing, banking, taxes. That's the next phase. Then what? You got to deal with your emotional management, yourself, your mental stability, your stress, your family, your health, sitting around too much, lazy, putting on some weight, not taking care of your body, not feeling good in front of the screen, feeling lethargic, tired. And then you got to manage your time all around you, all the stuff, making it all fit. If you're working a job, trying to transition, if you're trying to balance your family, your wife's not happy with the amount of time, or your husband's not happy with the amount of time you're giving him, not seeing each other, you're not setting aside date night or time to be together, your kids miss you. This is all part of the business. That's what makes it difficult. If it was as easy as reading a pattern on a chart, everybody in here would be successful and we'd be all sitting on an island somewhere together. The problem is you got to balance all these facets. If you're just sitting here going, I see those patterns, I could do this, you haven't even scratched the surface of what's going on. There's many facets to the business. That's what I'm here for. That's why you came to this group. But where do you start? Right? One foot in front of the other. Can you see a pattern? Can you identify it? Can you pick a directional bias? And that's what I'm going to focus on tonight. All right, so we talked about flashcards last week. I got some great examples. I don't know if he wants me to say his name, but I'm going to say it anyway because he did some good work here. David, I don't know if you're here, but it's nice stuff, man. So the only criticism that I could have is that I like to see this stuff maybe over here, right? And I'd like to see open gray space by sliding the chart over or blacking it out with the matching background color, and then draw what you expect to happen, right? Because then you see it play out. So maybe he would draw like a breakthrough, tap into the 200, maybe a double tap into the 200. Next level would be blueberry. You can anticipate where the average would move to as price moves. This would roll over flat and you probably would pin through here. This is the kind of stuff I want to see. Then you're going to push retest single and into a level 3 consolidation to end the day. And then see what happens, see how that plays out. And you can make multiple scenarios. You could say, okay, price breaks higher this way, then this is what I'm looking for. I expected to trade back to the tracer and give me a double top, trap through, pull back, retest, drop, that kind of stuff. You have to draw it with a pencil and then imagine it in your mind and then watch it play out. That's how you do it. You have to see it, right? There's something that goes like see it to achieve it. I don't know, something like that. You guys probably know. Type it in there for me. But it needs to be sketched out ahead of time. And it's not hard to do. Show up 1 o'clock or whenever your time is right here, and you figure out when you're going to look for your setup in this window. And then you leave some gray space, take a screenshot, sketch it in there, and then see how it plays out in 24 hours. See where you're at. All right, but these are good, man. He wrote in his notes what he saw, right? We see a peak formation high. We see pullback. What do we expect? We expect a stop hunt, right? Just looking at this, we expect a mild stop hunt coming into day 2, right? If this is peak formation 1, this is day 2, we expect a mild stop hunt not to exceed the Asian range. That's a typical formation. All right, another one. This is one of my favorite trades, right? So you can draw this up like this, put a box here, contained by the blueberry, right? Moving average. You got a pin through, pull back, retest into, and he's got his entry here after the averages. Another entry could be close through here, tap, or through both of this spaghetti stuff lower, right? Then the target would be somewhere down here. And we'll start looking at these levels for a way to get out of this thing. All good stuff, man. He did a great job with these. These are some of my favorite setups. He marked them up, right? He's got his divergency over here, right? Not exactly. I would have liked to seen this pin through a little higher up to the blue tracer. Then it would have been more divergent. So I guess it's just regular. Good stuff, though. One more. He's got a W. I always take the sell side stuff. It's my favorite, but there's his long side, right? You got your anchor, right? Flip here. This came off of I'm almost positive a shoulder head shoulder pattern, and GBP is notorious for that. Pound crosses. All right, so if your flashcards look like this, you're doing great. If they look better than this, you're doing even better. But the only criticism I have is that I like to see gray space out in front, but I think they're wonderful. That's why I made examples out of them. And I hope you guys are on your way. All right, so let's get to the charting stuff. So where I left off last week, we were talking about directional biases, right? Compressing 3 to 5 days and use price action on your screen. The thing is, I don't know, a lot of people are trading off laptops and phones, and I'm an older guy, so maybe I'm just stuck in my ways, but I'm not a fan of that. I feel like you can't get a good directional bias on a 3-inch screen. It's just, I don't know, maybe my eyes suck. I don't know what it is. I do wear glasses now to look at screens, so maybe that's my problem. I don't know. But, you know, if I was younger and progressive, I'd probably be like, this guy's nuts. I'm using my phone all the time. Okay, whatever. But to be fair, you need to be able to see 3 to 5 days data compressed, and you need to see clear angulation and scale. And if you can't see that on your phone or a tablet, then you're on the wrong equipment. So I do feel, however, you can manage your trade effectively from your phone. So once you make an entry, you can manage your trade or keep an eye on your trade. You should have the phone number to the desk on you, not your desk, the trading desk at your broker. In case something goes wrong, you don't get filled or you notice that it doesn't clear. Your platform could be down. It could be anything, man. But I think you need to be on a screen, at least one normal size screen. When I say normal, 27 or larger. The smaller screens just don't cut it. I just think you need minimum of 2 screens, 27, maybe 25s, 24, 25s, 27 should be the minimum. Just keep it in mind, all right? So, quick pop quiz. How are you getting a bias for the day session? What are you looking for on the screen? What should be the things that are on there? Just tell me real quick. Right, we talked about this. It should be a laydown for you right now. You should know this. I'm going to take a sip of Diet Coke while you guys think about it and post for me. Yep. Sean, I don't know if you have that stuff pre-filled out, but you're always the first one to the punch, brother. Yep, thank you. Cool, cool. All right. Okay, so prior day's direction. Okay, well, where did it come from? Where is it going? Where has it been? Is it flat? Is it sideways, right? Flat print consolidation. What's the position of the moving averages? Where's the last moving average crossover? Was it yesterday? Is it developing? Is it re-squeeze in front of you? Right? And I haven't mentioned this, but I started talking about it. A re-squeeze is as good as a cross. So you got massive separation, the averages come back together but don't cross, and then they re-separate. That's as good as a fresh crossover, man. All right, position of the blue tracers. Are they flat? Are they stair-stepped? Vector bars, oversized candles, outside bars, that stuff. This is what you should be thinking when you're looking at your higher time frame. All right, so I wanted to talk about stuff by the numbers. And this was exactly where I stopped last week. Right? We know that certain pairs have a specific behavior. The pound pairs behave a certain way. Pound dollar has a tendency to throw a lot of head and shoulder patterns, even on smaller size time compressions. Right? It's the nature of how they trap. Okay, so if you're trading a certain pair, you go, oh, I love this pair. Okay, do you know what it does? Do you know the numbers? Have you done this schematic? This was sent in to me by a student that has a couple of pairs he likes, and he's done the work. Okay, so what amount did the dealers use to trigger their stops in a particular pair, right? You can make a range, say 25 to 50, but it's specific. It's more specific for certain pairs. And you should know what that is roughly, because then you could do the math and you can work the numbers. What do the accumulation zones look like? Are they typically 25? Are they smaller if you're trading New Zealand? What does that look like if you're trading CAD? This is the kind of stuff you need to know. If you haven't done this work, this is the work that needs to be done. You could easily go back and look at 50 blue boxes and get a rough idea. Holiday, non-farm, what do these boxes, accumulation zones look like? What do they do when they break out? How much of a breakout candle do you get? Outside bar, pull back into the top or bottom, right? Another huge question, what time does the session throw an anchor? Okay, so if you got your blue box, right, over here, and then you got your shadow box right here, then what time would this second leg come in? Or what time would the pattern complete into the session? All right, so this is the biggest problem too, not knowing. If it takes you too long to confirm the trade, you get stopped out because of a traditional standard pullback that happens in every single pair, every single day of your life, whether you're watching or not. This number, what's the pullback range? Right, the only criticism I have of this guy's chart is that we know that L2 has a tendency to pull back, right? 48, 25 pullback, call this 50 with the spreads on each side, 25 pullback. This should have been drawn technically to about halfway, right? Because that would be a pullback, and my lines are crooked. So this is the stuff you got to know. What's the impulse leg? So if you're trying to confirm, here's one of the problems, right? And by the way, what's the best place to trade this chart? Anybody? All right, come on, too slow. I'm going to draw for you right there and right there, right? We're looking for this, some kind of retest here, something like that on both ends of the spectrum. There's places to trade in here, but here's the problem. So you're taking a typical move. You're looking for price to roll out of here. Maybe the ketchup is lagging down here. You're chasing it. You're waiting for a close below the ketchup. You're waiting for confirmation over here. You're waiting for things that are a little laggy compared to just pure price action, right? So you decide that after this confirmed, it crossed over, and you know what, it closed below the ketchup, but you know what, the mayonnaise was in the way, I'm going to wait. Okay, now it closed through everything, and you get in right here. Okay, well, you know that if you're 47 pips away from peak in this particular pair, you're in a very dangerous spot for a pullback. So you pulled the trigger on a closed bottom candle without waiting for the retracement inside. Even the candles or the 1/3 pullback, the minute you pull the trigger, price moves against you, because without knowing, you've managed to get in at the extended range low in this particular leg one or push one for the day. So now price comes back, you get stopped out, you're like, damn it, you don't get back in, and you watch the next impulse leg come out and move another 48 pips. This happens to a lot of people. I get this email regularly, unfortunately. And it's not doing the flashcard things that I was talking about and understanding the nuances of how this stuff works. It's anchor, impulse, pullback. Impulse, pullback, impulse, pullback, anchor, reverse. That's it. There's no other way to structure the market. I mean, there's variations on the theme and there's different ways to do it, and it's different in every pair, but this is the kind of stuff that separates the girls from the women, the men from the boys. I had to make sure I covered everybody. You understand? This is the work. This is the stuff that's boring that nobody wants to do. But because of the way I was mentored, I had to do it, and it made a difference. Understanding what you're looking at, right? I don't want you executing down here. I want you executing here. I want you executing near the top, short, near the bottom, long, or in a cycle in the pullback areas on the cycle. You want to execute after a push one pullback, that's okay, but you need to get it on pip 20 of the 22 pip pullback, on pip 23 of the 25 pip pullback. That's the kind of stuff I want you to do. It's just simple math, and it's a slight adjustment to your mentality. Stop being afraid that when something closes below the ketchup, you're going to miss out. How many times have you pulled the trigger on a trade, right? Here, right? Because it closed below some man-made mark that we made as a group, or I made. Technology has changed, man. If you're still trading the original stuff, I'm inviting you to move up, to take the next level. If technology grows and you stay still, you're a dinosaur. You get extinct. Adjust your brain with the stuff that's available now. I never dreamed of knowing what a book map would be in 1999 when I had 6 pairs to trade and pictures of the flags of the country, and you pick the country you wanted. You click on the flag. FX Solutions, look it up. One of the first platforms I ever traded on. My wife always reminds me that. She loves that platform. We just had 6 majors. I had no crosses, exotics. I didn't have access to futures contracts. Back then, futures, you had to put up to 180 grand for one contract of gold. You had to lay out the margin. Just the technology and the business has made leaps and bounds. On your phone, okay, yeah, maybe it's not ideal, but think about that. You have more power in the palm of your hand than I had on my very first Radio Shack Trash 80 computer. I know I sound like, Steve, you're a dinosaur. Yeah, I am a dinosaur, but I didn't get extinct. I'm here, man. All right, so listen. I want you to learn to be better, to take better moves, to use Carr's 1/3 pullback rule on a candle to get in, to give yourself a better execution. Stop going, oh, it's going to get away from me. It's going to get away from me. When you see the one big candle, you know there's a pullback coming right after that candle. And if you execute at the very low of the candle, shame on you. I've never taught you to do that. That's chasing price. You don't need to chase price. Let it come to you. You're going to be better for it, I promise. You save 4 or 5 pips. That's the difference between you getting in here and getting stopped out, or getting in here and your stop's out of reach on the swing. You understand? That's why you'll stay in the game. You'll stay in the trade instead of getting stopped out. All right, here's something about this. I call it time decay and your patience. And this is a huge problem. I've got a lot of emails about this lately, and I think it's people trying to come out of the gate strong. And I get it, but if you can pinpoint a general time that the anchor forms, stop hunts come in, your setup occurs. You can eliminate added personal and social pressure to take a trade. Right? And when I say social pressure, I mean from your wife or whatever, or whoever you're trading with, trading partner. Did you get something last night? No, I was waiting, and you know what I mean? That kind of stuff, that all plays into this. All of it. You need to eliminate that. and you eliminate that by the general time that you're in front of your screen. You show up at 12 o'clock New York time, it's a little early, and you hang out till 6, 7 a.m. Okay, if you're keeping normal office hours and doing stuff, that's okay. But if you're literally trying to get a trade from midnight to 6 a.m., 6 hours straight, that creates time decay on your patience, because you got to get something. You feel like I got to tell my wife, man. She knows I'm sitting here 6 hours. I'm up. I'm not sleeping. I got to leave for work in an hour. I don't have anything. Damn it. That's a problem. And I'm telling you, I know it's easy to dismiss this. A lot of people just be like, yeah, okay, whatever, man. But I also know there's a large contingent in the group that wake up, they look for London setups, they go back to bed for a couple hours, and they get up and leave for their job. And I know that's tough. But here's what you got to do. You got to figure out the best time window for your execution. Yep, there's people commenting they're doing that. I see you, brother. And the thing is that you're going to save yourself from some social pressures, some burnout, and being exhausted all the time. So if you know that when the shadow paints, and if you're looking for whatever the setup is, it's going to occur at a certain time in session, right? There's going to be some outliers that happen between the end of the blue box and the London Open. It's normal. But you have to figure out that if you're monitoring enough pairs and the setups are going between 4 a.m. and 6 a.m., then this should be your time window. Maybe you want to get the cobwebs out an hour before, so you got a 3 or 4 hour window in there, but you don't need to be sitting here at 1 a.m. waiting for this box to show up, because I can tell you it's the same time since I've been trading since 1999. It hasn't changed a bit. The box is still there between the right times, depending on the time zone you're in. It hasn't moved, it's fixed. So if you're showing up over here and just screwing around doing nothing and you should be sleeping, then you need to show up middle way through this box, or you need to show up at the beginning of this box if your structure takes X amount of hours to develop. If you're showing up at 1 o'clock and your structure starts painting at 3 but takes till 5 a.m. to paint, then you need to show up at 4 o'clock and then look for the possibilities of either going a little bit early or going a little bit later. And then you need to be done by 7. That gives you the rest of the evening to sleep instead of sitting there staring at charts painting all day waiting for a setup. You got to know this. Look, it's a little work that can save you from burnout. Is it a little work? It depends. It could be hard depending on how many pairs you're looking at. But if you like to trade pound crosses, they're generally the same. So if you do 1 pound cross, you're going to have a rough idea when all the pound crosses will fire. Of course, there's variances. But the question is, you have to find out if there's enough room in there for you to get some money out of it and make a living. That's the question, right? What time do the most anchors occur? Okay, from 3 to 5 a.m. New York, or 8 in Asia, etc. You got to know. Depends on the pair. What time would the retest come in for a flip, setup, or bounce? Are there enough occurrences of this in the course of a week, month, to make a living or to generate X, whatever your target of pips is? Everyone's different. Some people are trading more lots for less pips. Some people don't have that much capital, so they're trading for more pips with less money. You got to fit this in for you. Okay, is there a throwaway day? What the hell's that? I don't mean throw your money away. I mean, is there a day that if you're waiting for a bounce and the peak's forming, you're out of business that day? That's a sleep day for you. If you get a huge move and a reversal and the next day's putting in the peak, then you take Tuesday off if that's the day. You understand? So if you know this going in, then there's no reason to wake yourself up and stare at the screens. Right? Is there a lead-in day? As you hitting level 3, you go, okay, I'm good, man. There'll be a peak tomorrow. The way things are looking, the peak should come in tomorrow. And then ask yourself, what pair is going to add or subtract that issue these prints with the same time windows as the pairs that I like? So if you find that pound dollar works and you never looked at Euro GBP, maybe that might be a pair that would work in session for you, that you can add to there to give you another opportunity for a setup. And maybe if it adds 1 setup a week, that's 4 more setups, right? That's 48 setups a year that you didn't have. Those are the kind of things. It's all the background work. It's all the outside of looking at chart stuff that's going to make you a better trader. right? You're trying to trim your screen time down to a tighter window, be fresh during those hours so you feel good, and not get burnt out and not get divorced and not get separated and not have the problems that come with this type of lifestyle. Until you're home full time, you got to make these adjustments for your life. Otherwise, you're going to get burnt out or you're going to have other problems. And I don't want that for anybody. It's a common thing in a business where you're working a job and spending the other half of your time in front of the screen. When does the other piece fit? When do you see your kids? When do you see your family? That kind of stuff. And then Friday, Saturday, Sunday comes and you're exhausted. You got to sleep, and you're just not giving the stuff its due. Stuff's falling behind around the house. Listen, understand the business. The goal is to get past this stuff correctly, right? This guy sent me this. Why did he get stopped out? I covered this already, right? I talked about it here in summary real quick, right? The problem is people aren't doing the math. The business is math. It's a math equation. It's a math problem. A lot of things in life are math. Okay, if the impulse leg is 47 pips, you got the spread on either side, 1 times 2, you got about a 45 projection. Why are you taking 90 on a 45 projection? If you deal 20 pips off the top edge, what's the projected target? 25's got to be the target if you're trying to get out on impulse 1 before the pullback. You can't go for 50 if you're dealing too far away from the top edge or bottom edge. Right? So why do you get angry when you get stopped out when you're going for 75 if the projection is only 25? The other two levels, if a level takes, look, this is the question. If this takes X amount of hours, right? Let's just say this takes 3 hours to develop. An impulse leg takes 1 hour. A pullback takes 30 minutes. This one goes into the second part of the session, US day, right? And you may or may not get this by the end of the day, 24-hour cycle. You can't sit here, right? Because it's like when you mark them up, you can't take this entry and be pissed off that you're not down here by 1:30 a.m. if you started at midnight. It doesn't work like that. So do the math and the time decay. You got to start figuring out, if I'm here at 1 o'clock, if I'm right here at 1 o'clock, where will you be in 2 hours, 4 hours, and then structure your day based on that. If you get up at 1 o'clock and you work till 6, where's your target going to be? Your target can't be down here unless you just put it on and walk away. And you let it auto manage. That's okay too. And you look at it on your phone. That's okay. But you can't be pissed off if you're going for, man, I lost the pencil. You can't be pissed off if you're going for 60 pips and the impulse is only giving you 47 and you dealt halfway through that run because you're waiting for confirmations. This is the basic stuff. It's simple, and I just assume everybody knows it because they do the math. But the chart markets have been getting lately, and people are a little annoyed, is because they don't understand this. This is so simple, yet I guess highly overlooked. It's math and time management, and I thought I couldn't help you with that, but apparently I can. I have something to offer in this area. The greatest gift you can give yourself is some sleep by understanding how the math and the timeline works in the business. When you go bar by bar, you WSM viewer, you go, I got in here, got out here, I went over here, had coffee, and it was only 1:30. I was done. That's bullshit. It doesn't work like that. You both know that this sets up maybe in between the 3 and 5 a.m. hour, right? It varies depending on news and what's going on and what happened the prior day. Are they holding for consolidation? Are they moving the crosses, extending the consolidation, right? Leading into news, leading into somebody speaking, all that stuff. You got to play into that. You got to look at your news schedule and map out your week. By not mapping out your time, hold on, I need a drink. And yes, it's Diet Coke. If you're not mapping out your time and you're just sitting in front of the screen and shit's happening to you and you're tired and things aren't going right, take a couple of days and spend some time on this. Go back through your pairs and look at when the anchors are in, when things actually set up. That's what you need. That's how you map this business out. Okay, so we talked about, like I said, it's not enough to recharge. You got to work on your psychology, you got to work on your family and your personal stuff, and you also got to work on the best use, highest and best use of your time. Your time has a value, whether it's in dollars or whether it's in knowledge or whether it's in sleep and feeling good and being a good person to be around. All this stuff plays into the business, and it's hard, but we don't really talk about this stuff that much because I'm like, look at this chart, look at this chart. But this is background stuff that you need to know to manage the business. Until you're home, sleeping during the day and getting up when you feel like it, this is the way you got to manage the business, or you're going to be burnt out and fail, and you're going to curse me under your breath in 4 languages, right? 3 of which you don't speak. It's about doing the math and taking the time to understand what the business should look like, right? This was the best advice that was ever given to me, and I haven't mentioned it in a while, but I'm going to mention it again. I think the dude mentions it in this book. When you're taking a trade, don't look at the ledger for profit and loss and ticks. Close it. It's irrelevant. Look at the chart and what the chart is showing you. Never make a decision mid-candle. Wait for the candle to close, reevaluate the technicals and the trade. If you take a trade purely based on the technicals and what the chart is showing you, the money's going to take care of itself. You execute a trade, put the stop in and the limit in, and close the P&L and watch the candles in the chart. Get the money off your mind, because you know if you're trading any size, you're up $1,000, $2,000, then you're up $500, then you're up $1,800, $2,500, then you're up $1,000. Every candle pulls back, every candle ticks and moves. It's the closing of where the candle closes in the cycle and how the technicals are being handled. And I want to talk about that with the rest of the time we have. All right, so we were talking about this chart last week. It was a markup, right? This was pretty similar to what David Jumbo had on his markup. All right, we had some nice pushes, talked about where this went, what was going on, right? So the reason I brought it back is that I wanted you to start noticing these nuances of taking these larger levels where the flips occur and understanding the book values, right? Understanding that the stripes are in the book and that you get these perfect flips right here. And I want you to start looking at these, stretching these values out and understanding how it plays in the moving averages, the crossovers, how it separates, and how if you get a bounce here, right, on a 50 bounce, you could extend this box out, and this would technically be another bounce into the next day, but it occurs during Asia, and it opens up some more opportunity for trades. All right, so talking about going back 3 to 5 days, use Blue Tracer to identify the high low, right? Where does the dealer show himself? Where does the dealer show you his move? That's what you have to ask yourself. Where is he going to show me what he's going to do? Right? So same chart. You got this move here, right? So now let's look at the background stuff. What is the background telling us? Blue Tracer, okay? It drops down, but then if you highlighted this Blue Tracer, you notice that the level gets repeated and rejected here from yesterday, right? Actually 2 days ago. This is yesterday's number, so it's over here. Then price drops down and holds here, and then he traps through that and picks up whatever was stuck here from 2 days ago. Okay, you with me? All right, so we're looking at low tracer here. There's nothing here. We're looking at this low right here and the current low here. So we got a blue tracer here. All right, now, where does the dealer show himself? If you highlight this area on the book, on the chart, where does the dealer show himself? Okay, so we're going to take this. Let me erase this. Okay, we're going to take this and we're going to technically put a book map level on here. All right, we like these. I like these near side levels, and you know I can't draw. Sorry, that's about as straight as I can get. I have not been drinking, only Diet Coke. Look, so stretch this out. It looks like I've been drinking. I know it. Okay, where is the book go sell side? All right, we know that this looks like a really good peak. The dealer never repeats the high after he hits it in this area for three days in a row, right? We know by the blue tracers he's been working the top side. Okay, so the averages are flat, price turned over, went into consolidation, he's working. You're trying to get trades in here, it's tough. Maybe you sell this into the lows. But the trade doesn't really start developing until day 3 after the consolidation. The dealer shows the first sign of weakness, right? This would be a weak close on the daily candle, right? High to low, the end of the day slightly off of the lows. He flipped the book on these immediate patterns, and he flipped the book on the whole structure here. Now you got something. He forced the crossover by pulling price down to here. At this point in time, all you can see, right? All you could see is this, just starting to develop, right? You got pretty good angle and separation. You got a nubby right here sticking out, and you got a couple of averages starting to point down. Okay, so to make sure that the area is completely clear, you want to see them hit and take out all the tracers that develop. This one, right? Because this tracer, you can see it's behind here now. I went over it. So know that this was yesterday's swing low. You had a weak close and a pullback right at the open. This would be your refined entry into the future. Dealer makes a perfect finger roll V pattern, retest what railroad tracks, rolls out here. Okay, if you're not comfortable or catching this trade here, the next setup is going to be the same exact pattern. Look, the same exact pattern, but much later in the day. And this ends the day, some number. This is only, what, a 30 pip range box. So if you got the high, you're looking at maybe max 30, but you could still be in this trade technically. And then, of course, you get vector into day 3, a nice straight move down. All right, so now here you are. The dealer's doing this. What's the next move? You got your perfect pattern, right? What's your next move? If this is L2, your next move will be some type of retracement. Okay, so how are we going to gauge that? How are we going to know if we're going to get that? Right, so here was the trade I was talking about, right? There would be the target. And if you miss that, you have an opportunity for US session type setup here. Okay, now you're going to take these lines from Asia, right? The AR numbers, yesterday's high, right? And we're going to project that forward into time. We're going to take these numbers and project them forward into time. And we're going to take this swing low and project it forward into time. That's basically giving us our Bookmap levels without actually owning Bookmap. Okay, so now, show me what this looks like. You ready? I'm going to put the chart up. Mark it up. Mark up what are the possibilities? What will price look like? This is, by the way, this is like real time from yesterday and the day before. If you know the answer, don't cheat. Just try to think it through. That's the point. I don't want to take too much time waiting on you guys, but what should that look like? Draw it out for me. Okay, so if you project forward, you should have Asian rain extended, right? You should have that swing low pulled all the way over. Okay, so there's two possibilities coming out of Asia. There's a break higher or a double top down, and the same thing here. Down or a double bottom higher. That's it. That's the choices. Okay. The dealer fails to get above the Asian range, and he does a little trap through evening star formation back down. The perfect trade entry, right? You box this in. This is right, that AB pullback right to the moving average. There's a little baby bounce trade in there. That's a pretty good trade down into the lows. right? You either had grabbed it here or grabbed it here as a secondary entry, or if you grabbed it tight, once it got through the averages, that's okay too. When you trade into the lows from yesterday, you got to look at what he issues, right? He gets down here. What's the possibilities? The possibilities are the same thing. There's only a couple of choices. He hits the level and comes out. He breaks the level and retests lower, or he W's it, or half a bats it, or he does this. That's it. That's what he can do. It's all he's got. It's not a lot of in his repertoire, but it's enough to screw up 90% of the population. Okay, when he vectors down in here, outside bar, this structure, hold on, I'm having a rough time tonight. Too excited, I guess. When he vectored down through the level, right, he basically traded, he fished through the blue tracer from yesterday, triggering the stops of these morons back here if they were holding. No offense if you're in that. All right, then he throws a half a Batman. Haven't said it. There it is. I haven't given you the inverted half a Batman in a while. Okay, when he consolidates sideways and doesn't retest the low, you got to get in, man, here, or if you're waiting for catch-up here. Now, what are the possibilities? Okay, where's the levels at? Okay, there was a stutter right there. There was Asia. Okay, where does he happen to stutter at? He could stutter here. He didn't. Okay, so you got two choices. This, right? And then that, or you got back down. That's the choices. Where else? AR50. You got some action at the AR50 consolidation and the AR high. So what do you do? Tell me, what do you do? How do you mark this? Mark this up for me. This is a drill you should be doing, by the way. That's why I'm spending time on it. Mark this up. Right? It doesn't have to, listen, I'm the worst drawer on the planet. What does it look like? Stretch it out. Try to get the nuances in space, right? It should look like that. Okay, so you had your, look, by the way, everyone knows it's pound dollar. Look, this pair, it just does it for the heck of it, man, when it gets bored. Look, this is a micro version of that. Got to start noticing these things. Okay, so it tests, retests the next day, right? Taking the Asian range, here's Blueberry, happens to be right in the AR zone. There's another high side half a bat. Do I have to do it twice in one session? I don't think I've ever done it. There you go, man. All right. He stays. You don't get a full second leg. Okay, so now he goes down here. He fishes below the stops, but fails to take the level. Yesterday's Asian high. If he's trading above yesterday's Asian high, then the boxes look like this when you back up on a higher time frame. They're stacked. Higher time frame. Day one, day two of the next move, maybe. Okay, day two, we expect him to stay within the confines of Asia. Maybe a mild stop hunt slightly below the box. This is where the math and the work and the charting comes in. Okay, he's approaching this box. What do we do? If you got in here or in here, there's only a couple of moves, right? It's the same. It's SSDD. He can do that. He could single leg it half a bat, or he can get above it, retest, and go higher. Right? You're in London. You're in full session. You're coming up on the end. That's the decisions he's looking at. If this was a consolidation session, then he's handling the crosses and giving you very little to work off of. You got a 20 pip Asian range. He violated slightly below 30 pips top to bottom total. So you got to deal bottom edge to top edge or vice versa to get 30 pips. Right? If he's showing you 30, 35 pips and you got to take 25 off of a tight range because you got to take the spread off of either side and you got to take the lag in your execution into account. It's not going to give you 50 pips because you took it. It's going to give you 50 pips because that's what's there. You have to understand what you're looking at and what you're dealing with. Okay, comes in, retests, right to the high. Now here we are, decision point. He's above the blueberry. He took out the 4-hour level. He's above the averages. The averages are cupping. He's got a nice W formation. Stop hunt through here. What's the choices? He's going to break higher. He's going to reject back into the lows and get back inside of the blue tracer from yesterday. See it? So he's going to trap through, hit the stops off of the half bat of whoever was trapped there and trapped from previous days, and he's going to come back in the range. That's all he's got. Then what are the possibilities? Come below here, trade AR down into here, and then he's going to have the same decision points at this point in the chart. He's going to break it and go back in, trap through, or he's going to break really hard below, retest, and then drop into lower pricing. And then you start looking at the targets over here. What would be the target? Well, yesterday's low is a good place to start. ADR is not a bad place to start. The minor head and shoulders that was drawn is not a bad place to start. Right? This massive pin rejection from the other day that was taken out hard, that's not a bad place to start at the close in the open. You got to start doing these drills and understanding what the book is showing you to understand where the price is going to go. Then put the bigger picture together from the patterns and the TDI and the things that we've been talking about for years. This is the nuance on new technology that was given to me in 2014. You don't need the tool. The tool is confusing as hell. Okay, so right off the bat, what does he do? Shows a rejection. Okay, starts coming back inside the range. There's a close inside the blue tracer. It's important. Okay, so what's the next move? This is a top. This is a blueberry, right? This is probably flat printing now. This is turning. Anticipate. Anticipate what's happening here. If price comes back towards it, it turns. And there it is. That's what you had for the session. That's vampire time for me right there. It's over. So this was tough. There wasn't a lot of action there, but you had chances to buy and sell a couple of times by these little micro patterns, right? How do you know that this is going to hold, Steve? Because he failed to take out the high side auction, right? Buyers pushed the auction, sellers slammed it down. They pushed it back inside the range below the blueberry, sell the retest here, try to get the rotation back down to the other side. If you can't get it, take a scratch and be happy. All right, I know Moshi's still here, but I had to pull this trade for him. This is ES&P a couple days ago. It was like, I don't know, you can't draw it any better, right? Price comes in, by the way, shoulder, head, shoulder. Okay, so you had a trade into the lows off of here, but then you had this move, pull back, refine the entry, right? To flip the book right here and right here. Dealer takes the book higher. You're looking to the left for some refined entry. You got about 30 minutes to make a decision. 5-minute candles, 6 of them. You pull this out, draw your box. And I want you to see something over here. This is the stuff that you guys don't have. You don't need it. Why? This is a big choppy zone right here. This is a big chop. When there's a big chop, you move this on a different chart, it looks like this. This is on a 5-minute. Put it on a 1 hour, 15 minutes, a bunch of bars stacked together. A bunch of bars stacked together is where time and price come to sideways consolidation. It's usually the highest volume exchange because the dealers are balancing the books. It's called a POC, point of control. Point of control is where price goes into a sideways print. The dealer's settling the score. He's picking up the stops, balancing the book, and looking for his next move. But you're smarter than that. So if you take the aggregate, of this, it's basically a head and shoulders, right? That's the aggregate of this range. Okay, now he breaks below, hits the stops, breaks above, flips the book. This becomes the low of the day anchor. Price moves up a huge, massive amount, starts to pull back. You're looking for a refined way to grab the entry. You can literally pull from the other shoulder. And this applies to GBP. That's why it's relevant. You can pull from the other shoulder. I don't even have to draw it because the POC is as straight a line as I ever drew in my life since I've been teaching, right? Okay, so now you know that if you get this impulse leg and they flip the book above the last swing points, you use this area right here to refine the entry and extend it out into the future, and you go SLOs in the box or BLOs in the box. Buy limit orders. In this case, it was buy limit order. Now, what's the target, Steve? I'm going to take this move and measure it to here, and I'm going to measure this move to here. Okay? I like getting out here at yesterday's high in the day open. This drawing out here is a little high. Okay, so this is your 1, 2 entry, and the goal is to get in on these pins somewhere around in here. You're talking about a 0 entry, and you're talking about 100 plus points in front of you. Here's the measurement: 123 points from leg 1 to top. You got your typical pullback, and then you got 121.25 points, right? Almost identical to the day open. So POC, the day open, 121 points. Low of the day to the first turn, 123 points, 120. I can't see. I don't have my glasses on. All right. And if you would have held to the top side high area, 145. This is a good take, man. That's 123 times 4. That's the move. Sick moves. All right. And it's all started from this understanding the book and the bigger stuff going on. Refine the entry. Right. If you were trading into the lows, you had a couple of hookbacks, gave you an opportunity to get on. Right. You get this pullback here, refine the entry off of what? Man, maybe these couple of previous pins. Get yourself a box, an area where you want to execute. And it's okay to wait for this and this to turn, to take it. If you want to get this, then you buy. Look, you took what you could have took half or 1/3 of the candle. You would have got in here. It's right here above the swing. This would have took you about 75 points into the low. And then you back up, see what you got. You're trading outside. Look, see these numbers? This is called value, right? Value area high, value area low. That's the low, by the way. That's the high. So when price is outside of value, it has a tendency to snap back into the range. Okay, what is that equivalent to? Price being out of value is equivalent to being above or below the previous highs and lows of the day, because these numbers are based on yesterday's price action projected forward in time. So it's the same crap as a blue tracer. They just move a little bit. Understand? So if you're outside of value, price wants to be valued. Price wants to have value. Everybody wants to have value. Price rejects outside of value, seeking value. Value, this is just theory from Standal's book. It's boring. Don't read it. You'll probably fall asleep 20 times. I managed to fall asleep about 16 times, so I'm ahead of the curve. All right. I overstepped my bounds, talked too much. It's 8:03. I don't know why I can't get off this thing in plenty of time. This is a beautiful trade, man. It's sick. All right. But understanding the book in little pieces will help you understand the bigger picture, will help you make better entries and make better use of your time. That was the theme tonight. Okay, look, here's value. It's outside of value, comes back, retest value. Going into the session, right? Breaks below, pulls back. Where would I get an entry off of? Man, I use this line here. That's a trade. There's a hook back. Here's a hook back. Here's the lows. I get rejections on the downside. I get closes on the top. This probably is the end. When the dealer takes out this level, I know that if I'm looking for shorts, I'm in the wrong spot. This is the last place, just like I drew it on GBP. You take this, you draw a little box. This is what Bookmap does constantly. It constantly places the orders in the book and turns them red, white, or black. Black is absence of orders in the book. A solid color is order flow in the book. So if you got order flow in the book and you get the Pac-Man bubbles in the retest, that's the flip. That's what I'm trying to help you understand. If you understand the little tiny nuances everywhere in the book, look, this is a perfect zone flip right here. If you understand, I can't draw, but look, right there to right there, that's a flip. So if you understand this equals money, turn that on the side, it's money. If you understand that this is